The PE ratio is 8.7, the price to book is 1.6, and the year-over-year revenue growth is 25%. Do we have a winner here? And most importantly, is it the right time to invest? Let's check it out. Micron Technology is the fourth largest semiconductor company in the world. They design, develop, and manufacture memory and storage products used in computers and data centers. Although they are one of the largest semiconductor companies, they are not as glamorous compared with the likes of Intel, AMD, or Nvidia. Alright, let me start by analyzing the income statement. The revenue this time around was $7.8 billion compared to last quarter's $7.7 billion. Although that is a small step up from last quarter, that is 25% higher than last year's numbers, so the top line remains steady. The shipments were mixed amongst their business units, resulting in only a slight increase in revenue compared to the previous quarter. But there's a big jump in year-over-year revenue driven by increased shipments and average selling prices. Increasing average selling prices are signs of market leadership and, importantly, market demand. The semiconductor sector is cyclical, and we don't want to end up investing at the top of the cycle like over here. The gross profit has increased slightly from last quarter to $3.7 billion, and there is that big jump compared to the previous year. And the gross margin has also jumped higher and continues to gain. At 47%, Micron is commanding a very healthy margin. The total operating expenses have been trending up, especially for the last 4 quarters. It is driven largely by a jump in R&D investment at $792 million and a slight increase in sales and general admin at $263 million. Here's a chart that shows the ratio of R&D and sales and general admin to revenue. Micron spends about 10% of its revenue on R&D to continue developing new technology and products. This investment is crucial for a technology company to keep its market share and leadership, and at 10%, that is a very healthy level. As a market leader, Micron does not need to spend too much on sales and general admin to bring its product to the market. The ratio of sales and general admin to revenue is just 3.38%. After taking away the total expenses from the gross profit, the operating income came in at $2.5 billion, a slight dip from last quarter. The operating margin is a strong 32.7%, though it has been trending down the last few quarters. The net profit is $2.3 billion, and the net margin is again a solid 29%. The earnings per share has dipped slightly from $2.04 to $2. Looking at the valuations, the PE ratio is at 868 at the current price of $68.90. The PEG ratio is just 0.35 due to the strong 24.9% year-over-year revenue growth. So far, the top line is strong and the valuations are well within value levels. Next, let's take a look at the cash flow statement. Since this is the Q2 report, the cash flow is reported for the last 6 months. I will recalculate the numbers for the last 3 months that show the most recent quarter's performance. Also, we are only interested in a few key numbers from this report: the operating cash flow and capital expenditures to calculate the free cash flow. The operating cash flow has dropped slightly from $3.9 billion to $3.6 billion. At the same time, the capital expenditures have also dropped to $2.6 billion. The net result is an increase in free cash flow from $0.7 billion to $1 billion. Overall, there is a net cash inflow of $500 million, further strengthening Micron's cash position. The balance sheet is healthy with real assets such as property, plant and equipment, and cash. The assets have been growing steadily quarter after quarter, while the liabilities have remained relatively flat. Micron manufactures its products similar to Intel. Due to this, one of the biggest items on its balance sheet is property, plant and equipment. Unlike AMD and Nvidia, which outsource the manufacturing to foundries such as TSMC. Since they design and produce their products, Micron also has massive assets in intellectual property. The balance sheet only shows this at a value of $414 million. It is safe to assume that the actual value is much higher. Intellectual property is a hidden asset. Another hidden asset is their capability in the form of our people and processes that does not show up on the balance sheet. On the liability side, the biggest item is long-term debt at $6.9 billion or 9.6% of total assets. And Micron paid interest of $55 million or $2.4 million or 2.4% of net income on its debt. The debt levels are well within the norm. There are no issues here. Fundamentally, Micron is a solid business in the semiconductor market with healthy growth and profitability. At the current price of $68.90, it is a value buy with PE of 868 and a price to book of 1.6. But is it a good time to buy now? Let's take a look at the technical analysis to answer that question. The price has dropped from the highs of almost $100 to the current $68.90. The price drop looks like a healthy correction. It is not an over-the-cliff type of drop. The price is well supported at $65 and bounced up from this level to settle at $68.90 for the week. The next support is $61. My view is if 65 does not break, Micron will hit higher again and might hit to $100 and maybe even beyond. At a target of $100, the reward at the current price is $31. If it breaks down, it is likely to be supported at between 65 and 61. Taking the worst case at 61, the risk is 740. So the risk-reward ratio is 4. This trade is a bit tricky because you don't want to cut loss at the support zone between 65 and 61 only to see the stock fly right after. One way to overcome this is to spread the purchase over a few days or weeks around this level, buying on dips closer to the $65 mark. That way, you can set the cut loss to a lower level of 59, slightly below 61 since your average price is around 65. That will give a reward of $35 and a risk of $6, giving a risk-reward ratio of 5.8, much higher than the previous 4. Hope you have enjoyed this sharing. Let me know how you would make this trade in the comment section below. And have a profitable week ahead.